Alright everyone, welcome back to the channel for another Bitcoin update. In today's episode, we're going to be looking at the Pi cycle bottom indicator before moving on to some lower term time frame charts and talking about, on a range of different charts that we will cover towards the latter half of this video, the new candle body that we have on the weekly time frame and subsequently what to expect coming into the price action for this week. Before we do jump into this video, I would just like to give a shout out to Nakrov over on my Discord because they spotted this first, so credit where credit's due. Let's jump right in. So the Pi cycle bottom indicator, there's really not too much to this, so we will literally spend a minute. With the Pi cycle bottom indicator, this is simply the 471 MA and the 150 EMA, and you can see every single bear cycle that we've got, these didn't load in back into the 2011 bear, so we are subsequently looking at the 2015 bear, we're looking at the 2018 bear, and we're also looking at what could potentially be playing out this market cycle if we do once again cross. Now, this is very, very simple. The green line crosses below the red line and you have the Pi cycle bottom. If we switch over to the weekly time frame so we can see how accurate it is, you can see it called the bottom on the exact week. Let's go over to the daily time frame and see, did it call the bottom on the exact day? Well, the Pi cycle bottom flashed the day after the bottom. So that is very, very interesting. If we switch over to the 2018 bear, apologies for the chart going all over the place. Whenever I do this in a logarithmic growth curve scale, and then I move back over to the daily, it just freaks out. So once again, 2018 bear market low called on the exact week. If we switch over to the daily, now we've got the pain of trying to find where we were in the chart. Let's see. Did this call the exact bottom in 2018? No, but it called the day after. So this has been very, very interesting so far. Now, I don't necessarily think this is the one indicator, the end-all be-all, specifically because, you know, trends are meant to be broken at some point in time. This is probably not going to work out. Nonetheless, if we do look at the green moving average, which is once again the 150 EMA, it looks like it's coming down somewhat sharply. It has flattened out since we have been bouncing in the past couple of weeks. Or should I say bouncing? We've more or less just been trending sideways in a crab market. Nonetheless, the 150 EMA has gone slightly flat since then. The 471 is remaining relatively stagnant, and I think this is going to line up very beautifully for when we do have that final capitulation. If you do watch my channel, you know that I've been talking about how I've been expecting one final capitulation. My bottom targets are 18,500, which is not actually where I think the bottom is. That is just the next price target down for the CME gap. The next price target below from there would be 16,500 where the 300 week is, and then 14,000, or technically, if we're looking at the candle body closes, 11,600 for the Elliott wave theory to remain accurate. Now, just quickly, obviously we've got your 1, 2, 3, 4, 5, and we are in your A, B, C. So, you know, this should not close below the one wave on the weekly time frame. So subsequently, these are my macro price targets. We really do not need to spend too much time on the Pi cycle bottom. It is really as simple as the green line crosses below the red line and you have your bottoming indicator. So let's move on from the Pi cycle bottom. Like I said, you know, we are pretty much in a crab market right now. I mean, we've been the same price for a very, very long period of time. Apart from this one big flush out to the downside, you can see we are the price that we were on the 14th of June. So how long have we been at this price for? We have now been sitting at this price for 14 days. Well, I guess crypto goes fast. Nonetheless, this feels like an eternity because crypto traders are used to high levels of volatility, and we've more or less just been crabbing to the side. But what are our momentum indicators saying? Because, you know, most of the time, when you are about to have a bearish flip, a lot of the time the momentum indicators call that you're running out of steam and you're going to roll down before the price action does. Even though the price action is pretty black and white, you've got this, well, you've got a high, lower high at 23,000, and we've solidified another macro lower high at 21,800, just like I said that I believe we would. I specifically said 21,700. We didn't hit exactly 21,700. We came up $180 above where I believe we would top, and we basically solidified this double top rectangular resistance range. So this is now the new price target to be. I don't think we'll be heading back over here. There's a lot of indicators, you know, kind of pointing to the fact that we should be breaking down now. We're losing a lot of steam. This looks like a rounding top to me. There is no volume stepping in on the market at this moment in time. If I bring back the market, you can see, switch over to the daily time frame. By the way, this is on Bitstamp, and as you can see, volume is just absolutely stagnant right now. It's really not too much bulls or bears stepping into the market structure, but what you can see is if we do, actually let me head over to the weekly time frame in a second and I'll talk about the momentum indicators on this chart. If we look at the squeeze momentum indicator, this is something I pointed out over on my Twitter. If you do want to follow me over on Twitter, it is at 618_cowboy. If you don't want to remember that, it will be in the description down below, as well as all of my other socials attached to my YouTube. Nonetheless, we have the squeeze momentum indicator starting to trickle over into its light red phase. I talked about this in yesterday's video. But look at how this market structure works. You know, you've got a massive low down here, and then you've got a higher low, which sounds bullish, but this is bearish for the bearish momentum, because obviously you've got a massive wave of bearish momentum, and then you come back and you don't have as much of a euphoric move in terms of the bearish price action. So the momentum indicators were calling, you know, down here at 20,000 that the bulls were about to step in and take a massive run up. And from 20,000, we came all the way up to 21,800, had a $1,800 move. We had a big high, rolled back down, solidified a double top. And with this, we had a lower low in terms of the squeeze bump. What are we now doing? We're falling back over to the downside. And just like we had, you know, a big run and then a little run, and we had a big run here and a little run here, you can really see this was the apex where the market started shifting bullish. So on that same accord, having this high and this lower high should start shifting us into a more bearish phase, which is actually what I think we're going to be doing. Looking at the MACD on the 4-hourly time frame, this has started to flip bearish. You can actually see this is heading down very hard at this moment in time. Let's look at some other oscillators. The OBV, which is the on balance volume. This is just constantly making lower lows. You can see high, lower high, lower high, lower high, lower low, lower low, lower high, lower low, lower high, lower high, lower high, lower high, lower high. And just like we made a very tight range of lower highs over here before we came back down for a big move, I think this is very akin to what we saw, where you've in the lower time frames, because bear in mind this was your macro low over here, you had a little run up and you basically just started topping out really hard. This is right here to here within this range is basically the exact same fractal as we are seeing right here. You've got a very big macro lower low. You start in the lower time frames making these higher lows, once again very lower time frames, and as you can see the momentum starts to shift down, you run out of steam, and this is when you take the next massive gallop to the downside. This was also, you can kind of call this something like a rounding top on the OBV. You kind of just see the volume running up and the spikes are getting lower and lower and lower and lower, and you're kind of just rounding off before you fall back down. And this is exactly what we saw here. You've got a high, you didn't even make it back up to that same high, and you're just slowly trickling back down to the downside. And this is what I see happening on the OBV, making lower lows and lower highs in the macro time frame. And the RSI, the relative strength index, this also looks like it's losing strength and creating something like a rounding top. This looks like it wants to start heading down to me. We also talked about in my past couple of Bitcoin videos how you've got this ascending wedge, you had a breakdown, you had an ascending broadening wedge, and then you had a breakdown. You had a rising wedge here, and we've started another breakdown. Now, the breakdown target of this rising wedge, if we do extrapolate this, would be just where this red line is here, basically. So if we line that up perfectly, we can also see that we've got the red line down here. We should mark this as green because technically this is support until we break below it. But between the ranges of 19,800 and the lows of this rising wedge are around, once again, 19,800 to 19,700. I definitely think that is the next price target for Bitcoin. And you can see, look at the 4-hourly EMA ribbons. I mean, this is what a lot of people were getting out of bed for when we were quote unquote having our 5-day bull run. All we did, we didn't even come up into the daily EMAs. We came up into the 4-hourly EMAs, got rejected, got a double top, and now you can see if we zoom in, it's quite hard to see unless we zoom in, but the thicker red line, the really bright red line right here, is your short-term moving average. I believe this is your 21 EMA. You've got your 21 EMA, which is your short-term moving average, and your long-term moving average, at least in these EMA ribbons, is the 55. You've got the 200, I believe that's miles away. Yeah, 200 is all the way up here at 25,000. I definitely don't think we're coming up to there, but I can tell you, if we do come up, which I don't think we will, but it is a potentiality. I mean, it's really not too far. If we come up to 21,000 and get a move back down, I guess it looked kind of big when I initially said that. I really wouldn't be too surprised if we came up to 21, but I'm really not interested in $200 moves. I'm not trying to predict a $200 dead cat bounce. I'm trying to predict where we're coming in the macro time frame, and this is what I see panning out right now. I think we've got about another 5.5% drop to the downside in the short term. Once we do capitulate below 19,700, you're going to see that Bitcoin is breaking below its previous all-time high, which is, the top wick of this is coming in at about 20,000. The candle body close on the weekly is 18,800. So all in all, it can get really, really shaky if we start trickling down another $1,000, even another $500 would carry enough momentum for your oscillators, your squeeze mom, your MACD, your on-balance volume, and your RSI to start drastically pulling to the downside. So let's talk about the new weekly candle body opening. Now, you can say that we have a red, green, red formation on the Japanese candlesticks. I think that as we're in such a very clear-cut downtrend right now, it'd make more sense to look at this on the Heikin-Ashi candles. And when we do look at this on the Heikin-Ashi candles, you can see what bounce, what 5-day bull market, because it didn't happen. We didn't have enough momentum to change any of the trend whatsoever. And subsequently, we are currently putting in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is our 12th week in a row where we could potentially be closing bearish. If we do not push above halfway between the previous candle body close, this would mean that if we do not move above 23,500, which once again, if I don't think we're going to have a big break above 21, then I obviously don't think 23.5 is on the table. But nonetheless, if on the weekly time frame by Sunday we do not close above 23.5, we're going to solidify a 12-day bear market, or should I say 12-day bearish structure, because we're already in a bear market. It's not going to change if we do switch over to 1 or 2 weeks worth of bullish momentum at this point in time. Anyway, we're sitting below the 200 week. If we look at the Japanese candlesticks, we bounced up to this. We have basically 2 doji candles playing out right now. It shows indecision in the market, and I think this makes sense because what are we doing right now? We're making a very important decision. We're either going to have a very strong bounce from the previous all-time high, and a lot of people think this is going to be where the low is. I don't necessarily think that. I think we're basically deciding, are we going to come up to the 200 week and get back rejected, or are we just going to start heading back down to the downside? I believe that is the indecision in the market right now. I believe a lot of degenerative retail traders are heavily hoping to long this. I've been looking at longs recently and they are holding up very, very nicely. But nonetheless, when I say, degenerative people buying the dip, bear in mind, I myself have been buying the dip on Bitcoin. I'm just not interested in buying the dip on altcoins. I think this is a beautiful range to buy Bitcoin for the long term. Is this the exact bottom in my opinion? Absolutely not. I think 16,500 to 14,000 is much more conservative. We also do have a GDP report. I believe it's going to be coming out in about 30 days. And with that, if we do get another negative GDP report, then we are going to have back-to-back negative GDP reports, which will basically mean we are in a confirmed recession. The last time we had a confirmed recession was in 2008, and I talked about this in my last Bitcoin video as well. If we head over to the monthly time frame, look at what the stock market was doing after the confirmed recession in 2008. We absolutely plummeted below all of our macro moving averages. And subsequently, me saying that if we do have a confirmed recession, and me saying that we're at least going to come down 18.5% for the stock market, I'm telling you, this is very conservative. Like, a lot of people think, just because we're having a very nasty dip right now, and it's more nasty than previous Bitcoin dips. That has to mean that what happened previously has to play out in this market structure. And I'm here to tell you, no, it doesn't. We have not seen a recession in Bitcoin's existence. The last recession we had was 2008. I was pointing to the wrong thing here. If we move back, this was the last recession, 2008. Bitcoin did not come into fruition until 2009, 2010. I believe, the white paper and all of that was before then, but nonetheless, it did not start trading until after the recession. So what does that mean? Bitcoin has never been in the type of environment that we are in this moment in time, and subsequently saying, look at previous market structures. I really don't think it would make sense to say, look, this is where we bottomed previously, this is where we bottomed previously, this is where we bottomed previously, so it has to play out like this. The fact is, this bear market is very, very different to anything we've seen previously. And once again, this is why I think predicting that 16,700, which is approximately where the 300 week is very conservative. I'm starting to lean more over to the one wave impulse on the Fibonacci's, which once again, I'll just draw them out quickly. 1, 2, 3, 4, 5, and we would currently be residing within that A, B, C correction, which should lead us anywhere between 14,000 and 11,600 or so. We'll take it one step at a time. I definitely think 16,700 is the next price target to keep our eyes on. I really just don't believe that we're going to blast off our previous all-time high. We've never even come back and back tested our previous all-time high, let alone capitulate below it. So if that doesn't show you that the economy and the market structure is completely different than before, I don't know what will. So wrapping up the video, the weekly time frame for the SPY. Once again, if we switch over to the Heikonaushi candles, you can actually see, because of the relatively stagnant week that we had, because of the relatively okay bounce we had last week, and because we haven't done too much dumping in today's time frame, we're only down 0.38% on the weekly. This is basically why we're just hanging in there on the Heikonaushis for the SPY. If you start to see us move below 384, which is really not far away, I do think we're going to be starting to head down very, very quickly. And I think that this could even switch red by tomorrow, by the time the stock market once again reopens. But looking at the regular Japanese candlesticks, we've already switched back on Monday. Obviously today is the first day of the week. We're already switching back red after this dead cat bounce. When was the last time that we did this? Dead cat bounce, red candle, another lower low. Dead cat bounce, red candle, another lower low. Dead cat bounce, another red candle, another lower low. Dead cat bounce, another red candle. Where do you think we're going to go to next? I think we're coming down here. I'm definitely not saying that we're going to be down here next week. I'm not saying we're going to be down here in the next 2 weeks. I think in the next 2 to 3 weeks, we'll probably be at 350, which would represent another drop for the SPY, down 9%. That is going to be absolutely brutal for Bitcoin. Let's wrap up on the NASDAQ. I have basically the same assumption on what is going to be playing out on the NASDAQ as I do on the SPY. The only reason we additionally look at the NASDAQ is because Bitcoin is highly correlated to tech stocks, and what better way to look at tech stocks than the NASDAQ, which is an index fund of all the tech stocks. So with that being said, weekly time frame is starting to switch back bearish. You've got dead cat bounce, red candle, lower low. 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 Dead cat bounce, red candle. I think you know where I'm going with this. Weekly time frame, once again, just like the SPY on the Heikonaushis, is just hanging in there because we've had a tiny bit of bullish momentum coming in. But switch this over to the monthly time frame. I feel like this is obvious. You switch over to the monthly time frame, we're very clearly in a very, very nasty drop, and you can see this. The SPY, it's going to take its time, which is kind of a worrying signal, because if the SPY takes its time and it takes 6 months or so to come down here, which I don't think it will, I'm just saying hypothetically, if it takes a prolonged period of time, months and months and months, with the market structure the way that Bitcoin is right now, the way it already looks like it's rolling over, just like the SPY and the NASDAQ does, we all know that Bitcoin moves a lot faster than the tech stocks, than the SPY, the SPX, whatever you're looking at, and subsequently we could definitely see this move down a lot more. Wrapping up the video, once again, looking at Bitcoin against the NASDAQ, as we did a quick update from yesterday's video, we were calling for this 17% drop. We've only really just started dropping. We're down about 1.5%. which is pretty brutal. I mean, for the Bitcoin to drop against the Nasdaq by 1.5% in a day, when the Nasdaq is already going down almost 1% today, is really not a good sign. We're getting closer and closer to the 300 week, and you know, once again, unfortunately, we don't have data on how Bitcoin has traded against tech stocks, the Nasdaq, the stock market from back in 2008 when the last financial crisis was. Why is that? Because Bitcoin was not trading right then. So once again, wrapping up the video, to assume that the market cycle is going to play out exactly as it did previously, I don't necessarily think that is the way that we should be looking at this. This is clearly a, this is clearly a shitstorm that we have not seen before, and subsequently, I think keeping our bear market hats on, being slightly conservative, waiting for a prolonged period of time, just waiting for the next couple of weeks, maybe the next couple of months, is probably the best thing to do. And this is off topic, but this should definitely tell you now is absolutely not the time to be buying altcoins. I've been saying this on my channel for months. People who listen to me are now able to buy altcoins for 50, 75% cheaper. You know, even cryptocurrencies like green Satoshi token, which I told you not to buy since like $5 to $10, they're now down here at like 16 cents. So, you know, when I keep on making bearish prediction after bearish prediction, you know, I think it was only yesterday or the day before, we're calling for another 53% drop. We're already like 10% down. So if you are buying altcoins right now, if Bitcoin goes down to 16,500 and then we get a recession confirmed, I'm telling you, altcoins are probably going to drop another 75, maybe 50%, depending on what you're holding. You know, in total, looking at the total too, I don't think the entirety of the cryptocurrency market would drop that hard, but things like Ethereum, these could come down to like $500. The markets could get wrecked, and subsequently, I do believe altcoins are still setting up for the slaughter like they have been for the past couple of months. That is all I've got for you for Bitcoin today. I hope you found some value in today's content. As always, not financial advice. Cowboy out. Peace.